One month, headlines are cheering a soaring market. The next, they're screaming about a crash. Is it all just random, unpredictable chaos? Or is there a hidden rhythm to this financial madness? Have you ever felt the whiplash? You open your investment account, and everything is up. You feel like a genius. You made the right moves. You're on the path to wealth. Then, a few months later, you log in, and it's a sea of red. Your balance has dropped. Suddenly, you feel like a fool. Did you make a huge mistake? Should you sell before it gets worse? This emotional roller coaster is exhausting. It's the number one reason people make poor decisions, buying high out of excitement, and selling low out of fear. It makes the market feel like a dangerous casino, where the house always wins. Consider the story of two investors, Marcus and Lena. Both are diligently investing for their future. A period of great economic news begins. The market starts climbing steadily. Marcus is ecstatic. He sees his account growing and gets a rush of confidence. He starts putting in extra money, wanting to ride the wave. He feels unstoppable. Then, the mood shifts. Economic forecasts turn negative. The market stumbles, and then begins to fall sharply. Marcus's confidence evaporates, replaced by pure panic. Every news report feels like a personal attack. Convinced he needs to stop the bleeding, he sells his investments at a significant loss. Lena watches the same market rise and fall. She feels the excitement on the way up, and the anxiety on the way down. But she doesn't act. She doesn't sell. In fact, she continues her regular, automatic investments, just as she always has. What does Lena know that Marcus doesn't? She knows that the market has seasons. She doesn't just see the daily weather. She understands the climate. This is the revelation that transforms you from a panicked gambler into a patient investor. The market's movements are not random chaos. They are part of a powerful recurring rhythm, a cycle of two opposing forces known as bull and bear markets. These are the seasons of the financial world. A bull market is the summer. It's a long period of growth, optimism, and rising prices. A bear market is the winter. It's a period of decline, pessimism, and falling prices. Marcus was burned because he thought summer would last forever. Lena was prepared because she knew that winter was inevitable, and that spring always follows. Let's apply this with a powerful analogy. Think of the market as a great ocean. A bull market is like the long, powerful, incoming tide. It slowly and steadily lifts all ships, big and small. During this time, the economy is usually strong, companies are growing, and unemployment is low. Investor confidence is high. It feels easy. A bear market is the opposite. It's like a sudden, sharp outgoing tide. It can feel like a dangerous riptide, pulling everything down with it. Generally, a bear market is defined as a drop of 20% or more from recent highs. The economy often slows down, and fear becomes the dominant emotion. So what drives these tides? A complex mix of economic factors, corporate profits, and world events. But the engine that supercharges these cycles is raw human emotion. Greed and euphoria can push a bull market higher and longer than it should rationally go. And fear and panic can drag a bear market lower and faster than it should rationally fall. We'll be diving deep into this fascinating topic of investor psychology in our next episode on behavioral finance. But understanding the seasons is only useful if you know how to prepare for them. So what do you do? During the long summer of a bull market, it's easy to get greedy. This is the time for discipline. Stick to your plan, like the 50-30-20 budget we built in episode 7, and continue your regular, consistent investments. Don't get carried away and take on too much risk. The winter of a bear market is when your character as an investor is truly tested. It is terrifying. But this is where knowledge turns fear into opportunity. A bear market means that high-quality stocks, the ownership in great companies we talked about in episode 10, are now on sale. This is when the diversification we learned about in episode 3 becomes your greatest defense. The stable bonds from episode 11 act as an anchor, allowing you to stay calm and even providing the funds to rebalance your portfolio, selling some bonds to buy stocks at these lower prices. Lena knew this. She knew that the best time to plant trees is when everyone else is chopping them down. This knowledge is your empowerment. It frees you from the tyranny of the daily news cycle. You no longer have to guess what the market will do tomorrow. You simply have to understand that over the long term, the rhythm of bull and bear is a natural part of economic progress. The stock market has survived wars, recessions, and global crises. After every single winter, spring has arrived, and the market has gone on to reach new highs. The key is to stay invested long enough to see the seasons change. You are no longer a passenger, tossed about by the waves. You are the captain of your own ship, navigating the tides with knowledge and patience. This journey from passenger to captain is the heart of financial empowerment. True confidence isn't about controlling the ocean. It's about mastering the skills to navigate it, and those skills are best learned together. Our mission is to tackle the financial questions you're actually asking. Let us know in the comments what practical challenges you're facing, and your idea could shape a future episode. Subscribe and join the conversation.